Greetings. Today, my team and I will be presenting the marketing entry strategy for Grainger Industrial Supply in Madrid, Spain. We'll walk through the opportunities and challenges in this market, highlight our analysis of the competitive landscape, and share our recommendations on how Grainger can successfully establish a strong presence. Our goal is to show how Grainger can not only enter Madrid effectively, but also build a foundation for future growth across Spain and the EU. Here's a quick look at our agenda today. We'll start with the executive summary, then walk through the challenges, situation analysis, and SWOT. After that, we'll cover segmentation, targeting and positioning, our market strategy, financial projections, and we'll finish with conclusions. Grainger has long been the leader in North America's MRO supply chain, and now we're preparing to expand into Madrid, Spain. Madrid represents a strong opportunity. It's the country's industrial hub with demand across manufacturing, logistics, healthcare, and more. But Spain is also a market where relationships matter deeply, and local competitors like Worth and RS Components already have strong roots. To succeed, we need more than our vast catalog and digital platforms. We need local credibility. That means investing in Madrid-based logistics hubs or partnerships to meet Spain's fast delivery expectations, and building sales teams who can form trusted face-to-face relationships. In the short term, our goal is simple: establish brand recognition and secure those early contracts. Over time, we aim to grow into a trusted partner in Spain's MRO sector, not just driving revenue, but becoming embedded in the industrial ecosystem. This move lays the foundation for future expansion across Europe.
The challenges Grainger faces before entering Madrid's market. Grainger must overcome 6 barriers: brand awareness, competition, compliance, culture, speed, and price. Low brand recognition. Grainger is virtually unknown in Spain. Procurement managers trust long-standing local distributors. We need to build credibility from zero. Intense competition. Strong incumbents Worthworth, Rubix, Dexon, Liberia, RS Components are already offering localized services and competitive prices. Regulatory and compliance. Products must meet EU requirements, certifications, and reach chemical rules, and a strict labor safety standards. A dedicated compliance team will adapt the US catalog for Europe. Culture and commercial norms. Spanish procurement is relationship driven. Success requires face to face meetings, personalized services, and long term partnerships, not just online catalogs. Logistics and delivery. Customers expect 24 to 48 hours delivery. We must create a Madrid warehouse or partner with local logistics providers to match this. Price sensitivities. Procurement managers are highly cost conscious. We need competitive prices and value added services while funding local infrastructures.
Grainger is one of the leading global MRO companies. We strive to keep the world working by providing millions of products to our customers in North America, Japan, and the United Kingdom. Now we are looking for growth, so we anticipate entering a new market in Madrid, Spain. Our customers will value speedy deliveries, but they'll also value in-person interactions, as the Spanish culture places high importance on personal connections. We will need to focus on communication, transparency, and consideration of cultural differences. This will allow us to build trust and customer loyalty little by little. Competition will be high. Two of our global competitors are RS Components and Worth. Rubix is Europe's largest supplier of MRO products, and Dexa Burka is an MRO business that is based in Spain. They all work towards efficiency, quality, and relationship building. As we enter the new market, collaboration will be vital for a smooth transition. Partnering with local suppliers and manufacturers will give us local insight into the market and culture. Logistics firms will facilitate efficiency in transportation and streamlining operations. And trade and investment agencies will help us navigate Spanish policies and regulations to enter the market with ease. Aside from favorable regulations for international business, Madrid also has a perfect climate in the sense that they're an economic hub. This means that there's a lot of businesses and a lot of existing demand for our products already.
In looking at Grainger's SWOT analysis, we see several key points. Starting with strengths, Grainger has a powerful global brand, a broad catalog of over 1.5 million products, and strong supply chain expertise. However, a major weakness is the limited local presence in Spain, along with a heavy reliance on digital sales in a market that values face-to-face relationships. On the opportunity side, Madrid's industrial growth creates strong demand for MRO solutions, and there's a rising interest in single-source procurement and sustainability, both areas where Grainger can add real value. But we also need to be mindful of threats, including entrenched competitors like Worth and RS Components, price pressure in a very cost-sensitive market, and complex EU regulations. Overall, the SWOT shows that while challenges are real, Grainger's global capabilities paired with strong local strategy position it well in success for Madrid.
Here's how we define the Madrid market, decide where to start, and position Grainger to win early and grow long term. Segmentation, dividing by industry and buying behaviors. Our primary segment, industrial manufacturing, automotive, aerospace, metals, food, and beverages. Logistics and warehouse, 3PLs, providers, e-commerce, fulfillment, and distribution hubs. Our secondary segment, healthcare, the public sector of education, construction, infrastructures, uh, each with reoccurring MRO needs. Targeting, our primary focus, manufacturing and logistics for high demand, high volume, strong fit with Grainger supply chain strength. Our secondary focus, healthcare and public sectors for stable long-term contracts despite long sales cycles. Decision makers, procurement managers, plant and facility directors, influencers, CFOs, safety officers, and engineers. Positioning. Our positioning statement, Grainger enables Spanish businesses to work safely and effectively by providing a broad EU compliance range of MRO products, fast and reliable logistics, and personalized services.
Grainger's value proposition in Madrid is to provide businesses with high-quality MRO as well as advanced procurement tools. Grainger will divide its customers into two segments. High-touch solutions segment will serve large and mid-sized businesses with complex procurement needs, while endless assortment will serve small and mid-sized businesses that have less complex purchase needs. Grainger's marketing strategy will focus on product, price, place, and promotion. As it relates to product, all products will be compliant with the European Union regulations and will be tailored to local needs. Grainger will have an on-site inventory management service called Keep Stock to place automatic orders and track product demand. Grainger will also have e-procurement tools to manage procurement processes. For price, Grainger will adopt a hybrid pricing strategy. Penetration pricing will be used for commonly used items and a value-based pricing for premium services. Grainger will also offer volume discounts, and it will maintain gross profit margins between 35 and 39% to reflect the company's gross profit in the United States. For place, Grainger will establish local distribution centers in Madrid and partnerships with local delivery providers for timely delivery. High-touch solutions segment will need to collaborate with local sales teams and customers, while endless assortment segment will mirror e-commerce platforms such as Zorro and Monotero that will focus on self-service and third-party logistics. Grainger's promotional program will be multi-channeled. Personal selling will be used to build relationships with customers. Online marketing, such as Google and LinkedIn, to attract new clients. Email marketing to encourage current customers to buy products in large quantities. And trade shows to network.
For forecasting, our plan models scenarios based on key drivers. In the first 12 months, we would anticipate acquiring active accounts of anywhere from 150 to 300 by month 12. This would include 60 to 90 manufacturing, 40 to 70 facilities, 20 to 40 healthcare, and 10 to 20 public sector accounts with an order frequency of 1.2 to 1.8 orders per account per month at an average order value of 250 to 400 euro. Based on these drivers, Grainger's annual revenue could range from approximately 540,000 on the low end scenario to 1.32 million on the base scenario and 2.59 million on the high scenario. At a gross margin of 30 to 35%, gross profit would range from 162,000 euro to 906,000 euro. To achieve these results, the sales force would target 1,200 prospects identified through chambers of commerce and trade associations and expect to convert 150 qualified opportunities into 30 to 50 new accounts per quarter by the fourth quarter. As Grainger gains traction, it will scale operations and pursue growth levers such as expanded product localization, additional distribution capacity, and strategic alliances. The number of active accounts is projected to increase anywhere from 500 to 700 by the end of year 2 and 800 to 1100 by the end of year 3. Order frequency is expected to rise from around 1.6 to 2 orders per account per month in year 2 and 1.8 to 2.2 in year 3, while average order values projected to increase anywhere from 300 to 520 euro in year 2 and in year 3, 320 to 560 euro. Under these assumptions, annual revenue could grow from 3 to say 6.5 million in year 2 or 5.5 to 12 million in year 3. Maintaining our gross margins would yield gross profit of 1 million to 2.4 million in year 2 and 1.9 to 4.6 million in year 3.
As we wrap up, our recommendation is clear. Grainger should leverage its global strengths while building trust locally in Madrid. By focusing first on manufacturing and logistics, investing in a strong distribution hub, and leading with face-to-face sales, we can establish early wins and long-term credibility. With tailored marketing and e-procurement programs, we're confident this strategy positions Grainger to grow to Spain and ultimately across the EU. Thank you.